Hey guys, what's up? Welcome to this channel. In today's video, I'm going to be talking about chart patterns. But first of all, I need you to understand what chart patterns are. Now, chart patterns are actually price actions that tell you the next move of the market. If the market is bullish, there is actually a pattern that will tell you if the market wants to reverse or if it wants to continue in its trend. Now that brings us to the next segment, which says chart patterns has two patterns in which ways the market what actually moves. Now the first way the market moves actually in a continuation trend, which shows that the market is actually bullish, but it's actually in the zone, but it's going to be bearish, which is going to continue in this what bullish move. Now this is where folks make some mistakes and they'll be like, I think the market's about to reverse, so they look for opportunity to start selling. Whoa, that is wrong. If you're a part of these traders as beginners, I think this video is strictly for beginners. If you're part of those folks that try those stuffs, it actually is going to be what a loss for you, because why? You'll be stopped out. Now the next way the market equally give us patterns is to tell us that, hey, we were bullish, but I think we have gotten to the buy climax and the market's about to reverse to actually what a bearish market. Now you need to be able to pinpoint this thing. This gives you an edge. You become relaxed once you're able to understand what the market is doing. And one of the ways the market move is continuation. You're going to be seeing these chart patterns what happen all over the time. Now if you're set for this video, I'm here to show you so many secrets and how to be detailed about it, how to identify the chart patterns, if the market is actually bearish and what's to turn bullish, or if the market is bearish but it will actually still continue in this what continuation trend, still turning bearish also. Now, so if you stick with me, if this is the first time and watching this my channel, you can actually subscribe, like, and leave a comment in the section below. So if you're ready, let's get started. So as you can see, I'm going to be talking about the last where I stopped in the last video. If you've not watched the video where I talked about reversal chart patterns, I talked about something I'm going to be mentioning, and this is going to be a guide in this video. It's going to be for also continuation and also reversals. Okay, let's stick right. So what you can see is the cup and handle. Now because the cup and handle is actually continuation chart patterns that tells you that the market is bullish, but we are actually going to continue being bullish. But what will actually happen is actually buyers taking a rest, and what is happening here is giving an opportunity to traders to get in. As you can see, it's a cup and a handle. Here it's the kind of a cup stuff here, and this here is the handle. And this is the first time I've seen this stuff, so I'm going to be explaining it so you get a better understanding of what the market is what actually doing here. Now as you can see, we are bullish. Now please let me quickly say this before we continue. The first thing you want to do when identifying chart patterns is you should be in the direction of the market. It's very important. That is going to give you what an edge, because it's going to be telling you what next to do or what the price is doing. Staying safe with the market, guys, staying with the flow of the market is actually advantageous. It's going to be giving you what an edge. You'll be relaxed, because why? You know that we are bullish. So let's calm down and watch what the market is what doing. So as you can see, we are bullish here in this market. Now I would like to open your eyes to see something. This here is the last order block. Now in case you're wondering, order block, some other block is the zone where traders place their buy stops, buy limit, breakout, and all of that, and stop losses and pending orders. Now for example, somebody else was selling here, somebody else was expecting the market to what? Buy off. Now somebody was selling here, so the market came down. Somebody else was actually here buying to market to go up. So whichever way, whatever analysis you're doing, some other folks are expecting the market to break out of this zone for them to buy up to the upside. Whichever folks that you are, but I would not advise trading here on the buy pending. I will advise you see what the market is doing, so you'll be on the safer side. Okay, now as you can see here, we got this order block here. What next? Now I want you to point out something. Like I said, I'm going to be bringing out this video detailed. Point this zone here. This zone here is an order block. This should be where your eyes is. Now what do I mean by that? If the market should come to this zone and retraces back, that's when you should be looking for an opportunity to what? To buy still to the upside. Now what did we see? The market came down, and all of this was just to go up, break of structure here, came back down, came back down, and all of this rubbish that was just happening here, and all of a sudden we came back to the zone. Like I was saying, we came back here. What happened? There's been a break of structure. It's an advanced concept, but I want you to understand something. Remember the folks who were saying higher high and higher lows. Don't forget that. So this zone here, we should be expecting this market to retrace. Now your question should be, where will the market retrace to? How do I know that I'm going to be entering here on the buy? I'll tell you, this very simple. This here is telling you that we are actually having a cup and a handle. How did we know? The market has already actually given us this move, and we already have the cup and handle. Now, one thing about the market you have to understand is that whenever you have a knowledge about something, that's where you win. When you don't have the knowledge about it, that's where you lose money. Okay. Now, this is the knowledge about the market that I was saying. This is it. So since we know we have this already has been formed. Like I said, the market came back here. Your next move you should be waiting for is a retracement, and it happened. We came back down, and that's where to look for what opportunities to take market to what to the upside. Okay, that's the opportunity to look up. Now the next one is the, as you can see, we didn't see a breakout. The market might come in the future and give us a breakout to take us what to the upside. Now this for a cup and a handle. The market is bullish. Take note, the market was bullish. So there are some folks that come here to sell. It's wrong. Because why? We are bullish. You should be watching what the market is doing. Being the fact that you saw this single leg here for the market to come down and you start selling, or you're waiting for the market to come back here again and start selling down, it's actually not a cool idea. Because why? The market is still what? Very much bullish. Okay, this was a record of one of our students that took our analysis and was able to make out profit from it. Okay, now let's talk about this one. This stock like a triangle. The market was bearish. It's actually bearish. As you can see, we actually had a move up here and we started selling back to the downside. Now let me explain something. There's a secret that I actually use. I want you to be what observant of it. Remember, we have higher highs and higher lows. Don't forget, this is the lower high, lower highs and lower highs and lower lows. This is the lower low, sorry, and this is the lower high. Now I want you to identify something. Whenever you see a chart pattern, put your eyes on the last lower low that led to the move up. Put your eyes on the what last lower low that leads to the what the move up. If the market does not come back down to that zone, it means that we are actually on the retracement move. We are going to be continuing our move to the downside. So you want to stay clue with the trend. You want to stay what clue with the market flow. You don't want to be what left out. Now what you want to do is draw your trend line from that zone there up. Draw it from the last other block that took price. The last low here is going to be running out of liquidity here, so we're going to bring back up for us to right price to the what to the downside. Now you need to understand something. All of these things here that you have to identify, one of it that is very sensitive for you to take note of is this. All this move that is going on here, all this move that is going on here, none of them was able to close above this candle. I don't know if you understand my point. What I'm saying is, when you see a retracement move, some of them might be all this zone here, all this stuff that was happening, did not close above this. Did not close, even if it closed above this one, it did not close above this last one here. So this is our what structural level. It still stands. So all this retracement move here was just within this zone. Let me take all of this out. Was just within the zone. So it was just retracing here, and we finally what got price to what the downside. So it might be as though we are not going to be going down, but all the retracement move that we see happening there is actually what to trick out what traders that are in the trade to take an opportunity to buy, to take an opportunity or to buy. But what did we see price do? We saw price went back up, and we were able to what right price back to the downside. Okay, let's talk about this. Let's talk about this. Okay, now like I said, the first thing I identify is the market flow. The market flow is what? It's up. This becomes my structural level. Then what happened? We got to see price coming back down. What this is actually what? A triangle. It acts like it's coming down. Let me quickly say this. Now, whenever a market is bullish, whenever it wants to form a chart pattern, it forms chart pattern in an opposite direction. Now take for an example, we are bullish, the market start coming back down, and we know that we are bullish. We should be looking for sales, we should be looking for buys opportunities. Why are we looking for buys opportunities? Because why? We know the market is actually what bullish. So whatever we are seeing happening here that is as if it's coming back down is actually what to trick out traders and let them what get in on a sell here or anywhere around here so that they can what get what stopped out. But eventually we got a breakout. Eventually we got a breakout that took price back to the what to the upside. It is always advantageous to stay in the flow of the market. Okay, like I said, the first thing we want to identify is swing point. Now, another thing we have to take note of this in chart patterns. Don't forget, I'm talking about continuation chart patterns. Now, what is continuation chart pattern? They show actually that the price is actually what either buyers are taking a rest before pushing price to the upside if the market is bullish, or in a bearish market scenario, the sellers are actually taking a rest to push price to the what to the downside. So continuation chart patterns happen to give one of the things that happens when you see a chart pattern is actually what market looking for an opportunity to give traders more opportunity to gain an entries in what in the market. So that happens over time when you see price move that way. Okay, let's go to the next one. Now this is another one. See the triangle. The market is what bearish. Please don't get confused with this green candles you're seeing. The person just actually turned the green candles to actually bullish bearish market, while the green candles to bullish. Now I did this okay, okay. It's actually not confusing. If you get to the forex market to a stand, you will get to understand something, that you are not actually really focused on just the candle. You are focused on the market price movement. Now that was what I did sometime while I was new into day trading. There was something I always did. I tried to see how I can confuse myself. I can confuse myself, so even if I'm caught in the middle of the trap, I'm not what confused. Now, what do I mean by that? I turn the bullish candles into bearish, while I turn the bearish candle into bullish. Now, let's see how my psychology can work out. Because naturally, we believe that when the candle is bearish, it's actually for the bullish. When the candle is red, it's actually for the bearish, while the candle is green, it's actually for the bullish. Yeah, that's the truth, but we can turn it the way we want. Okay, you can play around your MT5 or your trading view, whichever one you choose to do, but just understand that what you're trying to do is you're trying to make your mind understand that you're not just focused on candles, you are also focused on the price movement and what the market is actually doing, which is very paramount. What the market is doing is more paramount than anything else. Okay, now as you can see, the market is actually what bearish. Take note of this. Is the last swing point. Went back up. Sorry, came back down, and we got a bearish. Now, one of the things you have to understand. Somebody was asking me a question. I think one of my students said something. Sammy, how can I be able to understand when a market is actually forming a chart pattern? How do I know? How do I know when the market is forming a chart pattern? Okay, the question they asked some time ago, this is the answer to it. Whenever the market is actually bearish, it's supposed to be giving us a lower high and a lower low, right? Something like this. We're up, we are down, we are up, we are down. Now this is lower than this. We keep going lower. Forget my trend line. We keep going lower, whichever way you want to call it. We keep going lower. Now, all of that thing happening there is actually what bearish move. That shows that the market is actually what bearish. So we should be looking for what? We should be looking for opportunities to take price to the downside. But where you see a situation whereby market does something like this, forgive this. Let me take this out. Okay, something is actually happening here, and what is actually happening here is that price is actually doing some movements here. Okay, this seems like a flag. So since we are bearish, okay, we are actually bullish. So because price was here, you should be looking for a breakout and take price to the upside. Now, I need you to understand something. One of the things you have to identify also is that whenever you see price do some funny moves like this, you will notice that the bullish, if it is market is bullish, you will notice that the bearish candles are actually small. Okay, they're actually small. The momentum of the candles are actually small. But if the market is actually bearish, you will notice that the bullish candles are actually what small. You notice the bullish candle actually was small. It just tells you that hey, we are actually moving. See, you can see here, you can see here this bearish candles that signifies bullish is actually what, small. So it's actually small. I think let me get this out so we don't get confused. Let's move to the next chart pattern. Okay, I think I can explain from here. This market is actually bearish. So we saw some things like this in between here. This shows like a rising channel. But if you look closely very well, let me take this out. The bullish candles are actually small. See the momentum of these bearish candles. But when we got to this zone, we got to find out that the bullish candles that were here we actually were small, which signifies that the price might not be able to what, the momentum might not be able to what, last longer. Now, how do I mean? How do I mean? I will tell you what I mean by that. Since I told you that staying in the market flow is actually cool, staying in the market flow is actually cool because it gives you an advantage. It gives you an advantage to know what the price is doing. Now, as you can see, after price break out of the zone, as you can see, the market returned back to a bearish what? Strong momentum. The momentum, what do you mean by momentum? Momentum is actually the price range. Okay, price range. Now let me quickly explain candle pattern so you understand what I mean. When the market opened here, let's use this as an example. When the market opened here, you can see the candles closed here and it was strong. In case you don't understand candlesticks, I had a book that I wrote about technical analysis. I think I have candlesticks explained there. In case you want that book, I will leave my link in the comment section below. You can just send a message across to us. What provide the book for is available in our Amazon store. It's equally available on our seller store. Okay, so you can gain access to it and get a better understanding of what candlesticks are and technical analysis. Everything I'm explaining in this video here is actually still on that particular book I'm talking about, technical analysis in forest. Okay, let's step right in. Okay, so the market is actually bearish. Now, one of the things that the market does, I will tell you why we have chart patterns. Three reasons. One, we have chart pattern because the market wants to retrace back to the trend line. Okay, that's one of it. That's one of it. The market wants to retrace back to trend line. Two, the market wants to give an opportunity to traders that missed this first entry to enter here and sell price to the what? To the downside. And thirdly, the sellers are actually taking a rest. So we don't expect the market to keep flying. Like when I was new into trading, I used to like, I can't wait for these chart patterns to happen. I want to look for an entry to get involved in the chart so I can just take price to either the upside or the downside. It doesn't really matter what you're taking price to. What really matters is you understanding what the market is doing. Now, funny enough, somebody was asking me a question that how do I know the particular chart pattern that occurs in the time frame that I can look for an opportunity to enter. Now let me quickly say this, please. Chart patterns happens in all time frame. It happens in the weekly time frame, it happens in the monthly, it happens in the 4 hours, it happens in the 1 hour, it happens in 1 minute, it happens in 15 minutes, it happens in 13 minutes, whatever time zone. Okay, but there is something I need to understand. You just have to identify the chart pattern in the higher time frame. Now, what do I mean by that? If the 4 hours is having a chart pattern, let's say, and this thing is happening in the 4 hours, it cannot actually it's not actually going to be flying in the 30 minutes. What it means is that for each 30 minutes candle that forms and close, or is being printed and closed, it's going to be taking 30 minutes for each of them to be formed. And once the price is done having all these moves and breaks out uh in the 4 hours, when you go down to 30 minutes, you see an opportunity to ride price to the downside. So what I'm saying is this: all chart patterns happens in 30 minutes also. So once the mark it happens in 30 minutes, you're waiting for a breakout. But once it happens in 4 hours, you're going to be waiting for more longer hours because it takes 4 hours for each of the candles to be formed. Okay, I don't know if you get the picture. Let me quickly say this again so you quickly get the concept. If a chart patterns is being formed, let's say an ascending channel is being formed in the 4 hours time frame, it's going to be taking 4 hours for each of the candles to be formed. It's going to be taking what, 4 hours for each of the candles to be formed. That means you're going to be having multiple candles in the 30 minutes, because why? It's 4 hours that is forming the chart patterns. But if it is 30 minutes that is forming the chart pattern, it's going to be taking lesser time, because 30 minutes, once it's done, there's going to be a breakout. Okay, so but you have to stick to understand what the chart pattern is saying, either in the 4 hours or the 30 minutes or in the 1 hour. That way you have a better advantage. That way you have a good edge to understand when the price is. Now there's something we used to do then in our 4 hours. I used to do it while I was a beginner because I was looking for strategy, but I don't do it anymore. But I'm going to show you what I used to do. Now what I used to do is, once the price come to the trend line here on the, let me take this out of all first of all, okay, once price come here, let's say to this trend line on the 4 hours, I'm going to be going down to 30 minutes to look for an opportunity to take price to this side, to the upside here. Yeah, since we are actually what, on a range. The same thing, when price come here, I'm going to be looking for opportunity. I wouldn't advise you to do this. If you haven't tried it before, don't try it. But all you can do is observe. Just know that whenever the price come to touch the trend line, there's always an opportunity to trade and take price here. Once you come back to this trend line, there's an opportunity to buy. So what I was doing was buying and selling at the same time, because why, I understood that the market was actually what, in a particular range. Okay, but to be an advantage, this is going to be taking you months to understand, but you have to first of all understand what the price is doing in the higher time frame. It will be so wrong for you to actually look for this kind of opportunity knowing fully well that the 4 hours is actually forming this, and you go down to the 30 minutes without having an edge on an understanding which has to do with experience of what the market is what doing. So let's move to the next one. Now let's talk about reversal chart patterns. Now, like I said, continuation chart pattern talks about when the market is bearish and continue being bearish. Now, but reversal chart patterns are actually different. Now, this is where the thing is. The market was in a downtrend, it's bearish. Now, all of a sudden, we saw a single leg, a swing point, a major swing point here, not a single leg, about that. Major swing point here. Now we're expecting price to break below it, but what did we see? We got here and the price came back down here. The next thing, this should be a double bottom, but what happened? We came back up again and came back down, but this becomes a what? Becomes a what? A triple bottom. Now the first thing you should ask yourself is, was this market actually bearish? Yes, we were bearish. Now, what are the reasons why I want to take a buy on an opposite direction? This should tell me that the sellers have actually been exhausted. The sales, we have gotten to the sales climax, so we should be looking for opportunity to reverse. And this reversal chart pattern simply means the market is telling you that you are moving from sales to an opposite direction. The character of the market has changed from bearish and you are turning into bullish. This simply means that the market has been oversold, and this is the reversal to it. And this reversal chart pattern here is triple bottom. Now this is the first bottom, second, and the third. Okay, so we should be looking for opportunity to take price to the what, upside. Now somebody might be asking me a question and be like, how do I know that this is the right time for me to enter? I dropped a video before now that we have different types of reversal chart patterns. We have aggressive chart patterns, we have pullback chart patterns, and we have breakout chart patterns. Now, this here is an aggressive chart pattern. Okay. Now, let me talk about this. Why is this an aggressive chart pattern? Because we have a candlestick here. Now, a reversal candlestick here. This is a preceding pattern. A preceding pattern here, this candlestick you're seeing here is actually one that closes a bullish candle, closes the bearish candle above 50%. Now, as you can see closely, let me zoom this out. As you can see this closely, this bullish candle closed above 50%. Close above what, 50% of this what, bearish candle, which indicates that the market is about to what, reverse. This is a good entry for you to take price to the upside. This for an aggressive entry. Now for the breakout entry, pullback rather, sorry, this might not happen as a pullback. It's going to be happening as a breakout because there is no opportunity for pull back here. So this here, we are expecting the market to either expect an order block around here and reverse back to this zone for us to gain an entry to take price to the upside. So this was actually the last stuff that happened. So we moved from here. This happens as a breakout. So this is the last entry for us to take price to the upside. Now let's talk about the next one, which is the reversal. Now, like you can see here, we are actually bullish and uptrend, and we had the last zone here, the last of the block. So we pull back, and we move back here. Sorry about this. We move back here. So this zone here took price as a resistance for a triple top. The last one we checked was the triple bottom. This is the triple top to take price to the downside. Now this gives us a signal that there is three things that happens here. There was a break of structure around here. If you go down to the lower time frame, there's a break of structure here, and this triple top here signifies that a reversal of chart patterns that tells us that the market is actually what overbought, but for us to take price to the downside. Now this happens opposite to bullish and bearish candle also. So bearish chart patterns, double bottom with bearish. So move price here. We had a neckline here, pull back down, entry here, and reverse towards the upside. I believe you guys have an understanding about it. There's a particular chart pattern that I didn't talk about the last video that I'm in a hurry to talk about. So this one is actually a change of market chart patterns. So we are this here. So this happen is a head and a shoulder, left head, right head, a head, and the right head. So this actually confirms this. So what I do some of the time, if I see some stuff like this, sorry. So this happens as the left, we had the head and the right. So if this happens as the last, so this takes ups to the upside, and this is the neckline. The market might fortunately come back here again in the future before we continue going back to the upside. So this is a reversal chart pattern also that happens as a head and a shoulder. This is one of my favorites, but quickly stick with this and understand the one that works for you best. And if you have a question, you can leave it in the comment section for us to give attention to. Whichever one that gives you a big challenge, we can actually give attention to it. Okay, this also is a reversal chart pattern. So this price here might probably come back. Sorry, this might come back here to this other zone here. So this is for top. Sorry, it's for top. I take price to the downside. This is a double top, so this is the left side of it, and the head. Okay, I didn't talk about the triple top, so I'm trying to delete this stuff. Okay, there's is the triple top that happens that when price wants to reverse in chart patterns. So what we have here, a break of structure here. So we have reversal here that takes price to the downside. um, okay, all of the chart patterns happen in the market, so to be on an advantage you can actually see it happen most of the time, that whenever you are opportune to see this happen, it gives you a better edge. If you are able to pinpoint what the chart pattern is, what the market is doing, you are able to get a better signal to understand the better edge first of all. And also the next thing you understand is there is a break of structure most of the times that happen here. There's a break of structure that happens most of the time here. So we had triple top here. So the market is bound to reverse from here. So this happens at the neckline. Now, why do we draw neckline? Most of the time, it happens as neckline reversal for us to take price to the downside. Most often, neckline doesn't work for beginner traders because they don't understand what the market is doing most of the time. So it is better to get an aggressive or you get a pullback. That pullback is actually more safer for you to put your SL at the top, which is the aggressive entry that started the move to the downside. So videos are actually available where I talked about reversal chart pattern. You can actually get an edge to it to know what the price is currently. So see you guys next week.